Duolingo. The stock just crashed, dropping 30% in a single day. It's now down over 60% from its all-time highs in May. But here is the paradox. The company just reported earnings. Revenue is up 41%. Daily active users hit 50 million. Free cash flow is growing. So, what on earth just happened? The market is telling you this company is broken, but the headline numbers look incredible. This is the exact kind of disconnect where fortunes are made or lost. In this video, we are ignoring the panic. We are going to find the real truth. What did management say that triggered this? Is this a warning sign or a buying opportunity? We'll find out. And if you want more deep dive analysis that cuts through the noise, make sure you subscribe to the channel right now. What is happening with Duolingo? That's the key question. Up until this latest earnings report, Duolingo was considered a growth stock, where you priced it by price to sales. They were growing above 40%, so there are a lot of expecting their future growth, but that changed. They expected their future growth to slow down under 20% per year. Revenues, for example, profitable to take a hit because they are investing. So that have changed. Right now, it is this thesis. Duolingo presents a compelling growth at a reasonable price. That's what investors are pricing right now. This is still a good company, profitable company with good fundamentals that are growing between 10 to 20% or will grow in the future, which is real good growth, bear in mind, but it's growth at a reasonable price, not high growth company with an incredible tangible addressable market for the future. In terms of their fundamentals, I believe it's a high score on the fundamental quality, 88.8 out of 100. They have good margins, good growth, really incredible management team, high returns on invested capital as well, great margin. So it's a really good company. Right now it's presenting a good margin of safety, but we'll go talk next. What is their business model? They have a massive user base with a free tier. Then they use gamification and AI, trying to retain the customers, the clients, and then with the conversion they have a subscription revenue with their paid subscribe. It's their business model, and they are the leader. It's like Spotify, Netflix. They want, if you want to learn a new language, use Duolingo. It's used all over the world. And AI, there are other bear case that is AI. They will learn language models with Apple. You can convert or learn from ChatGPT, for example, but that's not what we are seeing. I like to compare Duolingo like Spotify. 3 years ago they were saying Apple Music will change it. They will change to Apple Music. They won't use Spotify, and right now they are the leader. Everyone uses Spotify, so I want to believe Duolingo will be the same in 2 to 3 years. Right now they are still the leader. In terms of fundamental quality, I want to highlight the top 3. Their revenue is high quality with a recurring subscription model, which is very predictable. You have to pay a premium. They have their proprietary technology with years of experience learning language. Then their management is very competent, is doing a very good work. The company is profitable right now, free cash flow margin really high, and if they continue to grow, I believe they could be a very profitable company in the future. And when you look to their performance, we see our cases. For our base case, we see a fair value of $241. Right now, the stock was trading almost at $180 during this week. It ended the week around $200. Some margin of safety out there, but I would prefer to buy this company at a lower price. My bear case is around 155. For me to get interest, I will get interest under $180. Bear in mind, this is my final thesis. Duolingo, we have 3 scenarios. These fears are not coming to true in the future. They still will grow 30%, 20% per year, they will be remaining a growth company. It was just a blip, like Netflix in 2022, when they have one quarter with lower subscribers, and the stock crashed more than 50%, and then they resume growth. It could happen with Duolingo, and if that happened, it could be a $350, $400 stock. Right now, it is a growth at reasonable price. If they continue to, which is my base case, continue to grow between 15 to 20% per year revenues, and with good profitability, free cash flow margin between 30 to 40%, I do really believe we could expect high returns. But if this company, they are already reaching their tangible addressable market, and it is gonna be difficult to grow from this point, maybe you are already paying a premium for this company. You could see 150 stocks and coming down, but we don't know the future. That is the three possible scenarios we can see. In my opinion, they will remain leader. They will not be getting disrupted by AI. AI will turn this app better. So if you want to learn a language, Duolingo is the go-to app. So I remain very bullish on Duolingo. But for me, there are a lot of uncertainty because we don't. At least I cannot predict what their future growth will be, and that the major uncertainty I see in the stock. So for me to invest in this company, I have to be higher margin of safety. But that's just my opinion, and what happened this week was a re-rating by investors that are assuming that the growth will slow down in the future. So to wrap it all up, Duolingo is a phenomenal company with a powerful brand and a deep competitive moat. The growth has been undeniable. But this 30% crash all comes down to one thing: future growth is slowing down. The market isn't reacting to last quarter's great results. It's reacting to next quarter weaker than expected bookings and a new strategic shift to spend more on user growth. The key takeaway is this: the market is pricing a new uncertainty. If you believe this is a short-term issue, that Duolingo's moat is intact and their total addressable market is still massive, then this 60% discount might be the exact opportunity you have been looking for. But what do you think? Is this a brilliant move to reinvest for long-term dominance, or is this the first crack in the growth story? Let me know your position on Duolingo in the comments. And if you got value from this breakdown, please hit that subscribe button for more. Thanks for watching, and I'll see you in the next one. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advisor before making any investment decision.